So we're here at Smith & Wollensky because of your annual lunch to benefit Glide Foundation, something that was so near and dear to your late wife Susie's heart. Explain to me why you're involved in Glide, besides Susie's investment, because you also involved, for example, with Bill Gates at that macro level. This is more the micro level.
This is the micro level. This is a fellow, Cecil Williams, that went out to San Francisco more than 50 years ago and had a church that was run down and just started helping people. And I've seen him do it in action. I've been out there, and he's now feeding more than 20,000 meals a day to people. He's helping battered women. He's helping people learn vocations. He's helping the people that the world has given up on in many cases, and sometimes they've given up on themselves. And Cecil never gives up. And I've seen it. It's magic. And here he is. He's 88 or 89, something like that, and he's still out there helping people every day. And it's retail philanthropy, but it does a lot of people a lot of good that have gotten the wrong short straws in life.
And it's a reminder that we have so many people in this country that still really have come up short.
David, you and I have been lucky. I mean, in hundreds of ways, and some people are unlucky, and they need help, and they need somebody to believe in them, and Cecil does that, and he turns it into reality, and people in San Francisco pitch in, and through this lunch, we've got people around the world pitching in.
The stock market is really on a record tear, I think it's fair to say. You've always drawn the distinction between price and value.
Right.
Are we seeing a run-up in value or in price?
Well, value gains from year to year. I mean, as companies retain earnings, stocks basically, if you own a business and you plow back a good portion of your earnings into building the business, you're going to have something more valuable on average year after year. Now, sometimes the market reflects it, and sometimes it's crashing for some other reason or whatever. But the stock market builds in value, underlying value from year to year. And it's grown a lot. I bought my first stock when the Dow was just under 100 when I was 11 years old, and look where it is now.
Well, look at where it is right now, because one of the things you take a look at to measure it is the total value of the stock market compared to GDP.
Right.
And if you look at that graph, it's at the high point. It's the highest it's been since the tech crash back in the late 90s, as a practical matter. Does that mean we're overextended? Is this a better time to be fearful rather than greedy?
I'm buying stocks, but I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year. I do know they're good businesses. And in relation, you have to measure investments in relation to each other, and your alternative for most people is fixed income. And you get 3.02% or something like that for 30 years. So would you rather invest in a company that's earning 15 or 20% on their invested capital and compounding, or would you rather have a 3% bond, which can never earn more than 3% while you own it?
At the same time, there are some stocks that are bargains, good bargains from your point of view. When the market's up this high, that means values have gone up quite a bit. And you're sitting on a lot of cash, $110 billion. As a practical matter, don't we have to have more fear in the marketplace before you're really deploying a lot of that cash?
Well, I love it when there's, I don't love it for the country as a whole, but I mean, that creates prices that make me want to shovel out the money as fast as I can. But we've been shoveling out money anyway, and it's not as attractive as obviously when I was buying in 2008 and 2009, and that wasn't as attractive. 1974 was the best year for buying securities in my lifetime. That'll happen from time to time, but you can't sit around and wait for it. You're never going to catch the bottom anyway, and everybody will be terrified at that time. We keep buying as long as we find something that's attractive to us, an attractive business at a reasonable price. And I love it if it's a really juicy price, but I still keep buying.
Healthcare, something you've been outspoken about. I've heard you talk about this. Go back to 1960, the total percentage of GDP in taxes has gone from 4 to 2%. At the same time, the total percentage in healthcare has gone from 5 to almost 18%.
Yeah, the corporate tax.
Exactly, corporate tax. So you are now involved in a joint venture with JP Morgan and Amazon to try to correct that. How are you going to bend that cost curve as a practical matter?
I wish I knew. The answer is get the smartest people we can working on it, and we've got a terrific leader on that. And and basically give them free rein and just and not expect something is going to happen next year or the year after. I mean, this is a 3.3 trillion or something like that industry, and every dollar has a constituency, and it's got all kinds of factors. You can't just chip a little bit here and there. So we're not in a hurry, and we'd like to be in a hurry, but we're not going to try and do something faster than it can be done.
You're a terrific leader, Atul Gawande. What is he doing?
He's thinking, and he's hiring people. Not very many people, but he will be hiring people. He's been thinking all his life, but he is now focused on looking at the system and saying, is there a system that can check this growing tapeworm, which is now up to 18% of GDP and is growing every year and is way higher than any other country, and can we do that and at the same time deliver a better product for patients? It will not be a success if it's just a cost-cutting measure at all.
That's part of the question. When you try to bend the cost curve, you've got two options, really. You either spend less from what you're getting already, or you get less. Those are the two options. So how much of this will be actually extracting monopoly rents, as it were, out of the system where people are making too much money off of things? How much will it be saying to people, you can't have the drug, the healthcare service that you expect?
No, we will not do it unless a very substantial majority of the people feel they are going to be better off under what we are proposing. But you can spend smarter. You can spend smarter. And incidentally, throughout industry, we do spend smarter all the time. I mean, we are so much more efficient than 50 years ago at making cars or you name it. So it's not impossible to think smarter about something. But you do get rigidities built in, and you get, very much in the way of self-interest, and it's hard to rearrange. It's like a Rubik's Cube. There's a lot of things to arrange before you get where you want to get. So it's a big challenge.
But that must create dislocation in success in the healthcare industry somewhere, because that money has to come out of somebody's pocket somewhere.
There'll be dislocation. I mean, there'll be, and there have been dislocations. We've been disrupting farming, ever since we had 80% of the people on farms. We decided maybe tractors were better than horses, and maybe fertilizer would help, and wouldn't be so bad to have some irrigation and a few things. And now 2% of the people are more productive than 80% were a couple hundred years ago.
You've often said that being born in the United States, particularly in the 20th century, is the best place, the best time in history to be born.
Unbelievable.
Right now, the United States is going through a lot of transformation, particularly in the political area. We see more and more extreme positions being taken, even some extreme actions being taken. Can you see a world in which we start to erode away that advantage of being born in the United States in this particular time?
I don't think so. I've seen going back the late 60s, early 70s. I mean, we were torn apart over Vietnam, and we had a president resign. I mean, we go through all kinds of things. I mean, we went through a Great Depression. We went through a great panic that almost turned into another Great Recession not that long ago. But this country moves forward. It'll keep moving forward. The luckiest person in the history of civilization is the baby being born in the United States today.
But how much does it depend on where they're born and to whom they're born and what circumstances? Because the difference between the top quintile and the bottom quintile is growing apart. It's not growing together.
We have the problem of a family that's getting richer and richer and richer, and the market system, which works wonderfully in terms of delivering output, now gives more and more to the people at the top. And if you go back 200 years in agrarian society, 80% of the people on the farm, if you were the best farmer in the world or best farm hand and I was the worst, there was some differential in our ability, but it wasn't 1,000 for one or 100 for one. And as society gets more specialized, more and more rewards from the market system will flow to the people at the top unless we do something about it.
We're coming up with the 10th anniversary of the great financial crisis. And most people agree that, in fact, the financial markets are safer because we've taken more reserves out of the banks.
Well, we've added to the reserves that the banks need to hold, and we've curbed their activities to some extent. The banking system is way better shape now than it was in 2008.
The banking system is a great system, but in part it's pulled back some, and other asset managers have stepped in. We have now BlackRock with $6 trillion, for example. For that matter, Berkshire Hathaway. We've shifted it from bankers to investors. So does that make the system safer?
The system will always have a panic from time to time. It won't come from exactly the same cause. Dodd-Frank did one thing, it's 2,000 pages, so it did a lot of things, but it did one thing actually probably would make it a little more difficult to deal with a certain kind of panic, because it is the power of the Fed to act in a panic sort of unilaterally can say, that this will end now, has been diminished. And I think that was a mistake.
Do we need Federal regulation of the non-bank banks?
Well, we need some kind of regulation of what if people are in massive lending activities, that we need, whatever their names, we need some kind of regulation. There's no question about that. The market system is wonderful, but animal spirits can go too far.
Finally, as you say, Warren, it's your 88th birthday, which is terrific. Look back on a 38-year-old Warren Buffett, instead of an 88-year-old. If you were starting out today, would the principles that got you to where you've gotten still apply? In a world of so much technology, in a world of globalization, a lot of things have changed. Have they changed the fundamentals of investing?
Well, the principles, no, they haven't changed at all. I mean, you try to evaluate where a business is going to be in 5 or 10 or 20 years, and you try to buy it at the right price relative to that valuation, and you leave alone the ones you don't understand, and you do not try to guess the market. It's exactly what Ben Graham wrote in 1949, and no, the principles don't change at all.
So Ben Graham still applies.
Absolutely.